So I want to welcome our next panel, which is...
Yep, so we've got Investing in Lightning panel. We've got Alyse, Killeen, Maria, Palma, who has the
lightning torch at the moment, so yep. she'll bring it back on stage.
Got Oleg Mikhalsky from Fulgur Ventures, Chris McCann, Brian Murray hosting as well. Welcome.
Thanks, guys.
Oh, sweet. We got an actual torch here. All right. Morning, everybody. I guess we're almost close to midday, but it still feels like the early morning. So we've got a great group here of people who've been investing in the Lightning Network. My name is Brian Murray. I work at a VC firm in San Francisco called Craft Ventures. We've been getting really into this space and very fortunate to be with such a great group of others who have been spending a lot of time in the Lightning Network. I gave a talk yesterday about the investment community in Lightning, and I think one of the big things that we're all partially responsible for is getting more investors interested in Lightning so that there's more capital resources for all the founders here. So to kick things off, if everybody can just quickly go around, introduce yourself, and give, if you don't mind, just giving a quick background on how you heard about Lightning, how you got into it in the first place. So Oleg, if you don't mind starting.
Hello. I'm Oleg Mikhalsky. I'm with Fulgur Ventures. Fulgur means lightning in Latin language. So we're an early stage VC fund focused primarily on Bitcoin and Lightning startups. I learned about Lightning in 2017 when all the Bitcoin and ICO craziness was happening. Like, I didn't understand that because I have no financial background. Like, I'm not a financial investor, not a high-risk investor. But I learned about Lightning, and I understood, hey, this is a technology. So I understand the technology, and I understand how to invest in technology startups as an angel investor. And that's actually through Lightning I learned about Bitcoin. That's how it happened.
Cool. I'm Maria Palma. I'm at a fund called RRE Ventures. We've been in this space since about 2013. So we were early in companies like Abra, Ripple, Paxos, BitPay, Chain, et cetera. So I've been around for a while, and I think in terms of Lightning, I always just follow, we're more of a generalist fund than maybe some of the funds up here, and so we invest in healthcare, IT, and space and satellites, consumer companies, fintech, so not just crypto. So I tend to over-rely on the smartest people in the space that I know and what they care about, and Lightning just really became something that took off in the last sort of year and a half or 2 years from my perspective, and so wanted to start paying attention and met Elizabeth, who's a force of nature, and got to know some of the key developers and just thought what was going on in the space was really interesting and really was part of the promise of what Bitcoin originally was, is enabled by Lightning, I think. And then was the Lightning Torch bearer, and I always make a crypto costume every year since 2015, and this year is the Lightning Torch dress, so had to sport it today.
Good morning. My name is Alyse, Killeen, and I am managing partner at a venture capital firm called Stillmark, which is focused on investing in seed to Series A stage companies building in the Bitcoin ecosystem. And Lightning is one of the areas that I focus on. The way that I came to Lightning was really through Bitcoin. So when I found Bitcoin in 2012 and 2013 and was digging in, I relied heavily on the Cypherpunk mailing list post. And we know from those exchanges and the dialogue that developed there that there was always expectation of higher layer infrastructure that would more broadly serve the community that used Bitcoin and that would allow for scale and extension of use cases. And so it was Lightning and other higher layer infrastructure that has developed since 2013 when I first came into the space. I think was always something that I was looking forward to and am happy to be participating in now.
Hey everybody, my name's Chris McCann. I'm the GP of a fund called Proof of Capital. We're a $7 million fund focused on the Bitcoin, crypto, and sort of fintech ecosystem broadly. I used to work at a more traditional VC fund in Silicon Valley called Greylock Partners. Greylock, if you're not familiar, is probably one of the top 3 VC funds in the world. invested in Facebook, LinkedIn, Dropbox, Airbnb, a whole bunch of other companies, mostly on the consumer and enterprise side. I first found out about Bitcoin in 2013, mainly because all the I bought some because of all the Silk Road stuff and just wanted to sort of experiment on that side. And then at Greylock, we invested in 3 Bitcoin companies in 2014-15 timeframe. So we invested in Blockstream, Zappo, and Coinbase. And that was the thing that really sort of forced me to sort of spend a lot more time with developers in the space and sort of the infrastructure and ecosystem around it. Long story short, I just really fell in love with the category, so that's why I left to start this fund.
Cool. Awesome. I think one of the most interesting things about this space is the history, especially that late 2017, early 2018 quick boom and bust. In venture, there's not really a similar dynamic where you have this priced asset that is moving at a pretty strange rate. And my personal experience is we founded Craft right in late 2017. And I saw a lot of firms get burned by participating in ICOs, et cetera. So, Maria, I'll start with you. The question is, where do you think the mindset is for investors in crypto generally, and then Bitcoin and Lightning more specifically? And has the boom and bust cycle affected the mindset of current investors?
Yeah, for sure. I think it's a great question. The 2017, 2018 timeframe definitely changed. I think a lot of what we're dealing with today. We were, as a fund, debating, should we just raise a separate fund just for ICOs? What do we do? And a lot of our investors kind of saw us as early investors in the space since we were in 2013. And we had some access to relationships, but it looks very different to make money on pre-sales and coins. And it was just such a kind of mini bubble, if you will, that we thought it's not what we do best. Like, we know how to hold long equity and help founders grow businesses. But I do think it brought a lot of other investors in the space, and a lot of people got burned, and I think it makes it harder today. I think it makes it harder and easier in some ways. I think it's actually good for Bitcoin and Lightning, because it's clear that it's just not easy to get tons of, ecosystem around so many different tokens and coins. I do think it's kind of made token sales a bad word in some circles, and so I think it's interesting to think about token sales even as an exit, and I do think it can be a good source of liquidity depending on what you're doing. But I think especially investors that aren't just focused on the space are a little bit more burned and nervous about it and kind of feel like it was this promise that didn't happen. So I think what that translates to for founders today is you kind of have to be clear about what your real value prop is, and also demonstrate, I think, more traction, not necessarily in traditional ways like revenue, but some types of traction, like even on Lightning, it's like how many channels are open, how many things are being built on top of Lightning, things like that, as an example. But I do think one thing to kind of dispel a myth, and you said this in your talk yesterday, but VC money does not grow on trees, unfortunately. We also have investors, so it's like pension funds, sovereign wealth funds. So if we don't make a return, some teacher in Wisconsin, where I'm from, doesn't get their retirement. And so what that means is we need to, even though I think there's a lot of things in the space that will be amazing in the next 10 to 15 years, as investors, we have to really be focusing on what's monetizing in the next 5 to 7, realistically. So I think that does change the lens a little bit and burn some few people. And I think as a founder, it's like a sports team. Like, you don't want the person who's only there in the good times, so you'd rather look for investors like the people on this stage who just really get it and are believers. But you do have to be aware that that is out there and kind of do some education when you go in and pitch investors as a result.
Yeah. Chris, any thoughts on that topic?
Yeah, it's kind of interesting. So we're a venture capital fund, so we primarily invest in equity companies. Like, we didn't really do any of the ICO stuff. We don't do like liquid trading. We're not trying to do arbitrage or market making. Like, there's firms that really specialize in it. I'd say like 2 general comments to this. One, a lot of the earlier crypto funds tried to be both a hedge fund and a VC fund in the same vehicle. At least personally, I think that's very structurally hard. I think you either pick one. Like, we're a VC fund. We primarily come from much more of a sort of company building and entrepreneur background. Like, we are not fundamentally traders. There are some people who are the complete opposite of that, but I think you sort of pick one. And then, since being kind of coming at it from more of a venture lens, it's interesting because in the sort of normal Web 2 world, you build companies, you sort of have ups and downs, but the equity is fundamentally not priced until financing events. In the Bitcoin world, even though you invested in a company, you have this liquid trading thing, Bitcoin, which is doing its thing all the time. And it's easy to say that has no effect on the company layer in this, but the honest answer is it does. Like people who are sort of working on companies in this space, like if Bitcoin goes back up to 20,000, everybody's going to be excited and elated, and if it goes back down to 3,000, people will be a little depressed. Even though the company layer, it doesn't really affect the company layer directly, sort of indirectly, psychologically it does. And same thing applies to all the investors too. I think it's easy to say it doesn't, but at the end of the day, when you have this tradable liquid thing that has a price every day, it does sort of affect the mindset of people looking at the space.
Yeah, definitely. It was so funny reflecting back on that time. The new pitch deck was the white paper, right? And then everything was about the story, and nothing was about the substance. People were raising like hundreds of millions of dollars on a white paper and a story and some new consensus mechanism, blah, blah, blah. So now I think Maria, to your point, it's sort of reversed, and now you really got to show some substance in the form of traction, and that could be through a number of different lenses. Shifting gears a little bit, we're in Berlin. A lot of people think of Silicon Valley as this hub of venture financing, but one thing I've noticed is the diversity of the people building in this ecosystem. So, Oleg, if you wouldn't mind giving your perspective on, from a venture funding perspective, are you noticing differences in the excitement across geographies for the Lightning ecosystem?
Yeah, that's a good question. So we started investing early. We actually started investing during the crypto winter, and we're working with companies both in Europe and in the US. I cannot speak for Asia a lot. We just don't have experience there yet. I think like there is big differences in the investor mindset and founder mindset that we just need to be aware of. And like in the US, the investors are more looking for kind of like scalability and like building like the bigger things. And the founders are also more looking like for taking more risk, putting all the risk on the investors by raising more money. And like you either like quickly learn that you fail and you start again, or you just become successful. In Europe, both like I think VCs and founders are more like cautious. Founders sometimes prefer to like spend their own time, their own money, build a product, and then show it to VCs, and companies kind of like stay private longer. But also on the VC side in Europe, like actually the valuations are typically lower for European startups. I don't know why, but this is just like the market. But at the same time, there is like fewer VCs also in Europe. So it's kind of like a little bit of imbalance that we just like need to be aware of. If I may add like one more point is actually about like the markets, the end users. If you take like consumer users of applications, so in the US, a lot of people are driven by like economy of like discounts. So we bet a lot of like staking SAPs and Bitcoin powered rewards for the US market. In Europe, like people more about like privacy, user experience, and like really enjoying a very good product. So I think also that's something to kind of like keep in mind depending on which market you're building for. Yeah, I don't know, like, you want to add something about Asia?
I guess just the short high levels, we're a pretty cross-border VC fund. So one of the things that makes the sort of Bitcoin, Lightning, and just crypto ecosystem in general so interesting is the fact that like there really is no one center of gravity. Like typically in like sort of Web 2 or Web 1, it was mainly Silicon Valley with maybe its own independent ecosystem in China. In the Bitcoin space, it's very it's distributed. It's kind of all over the place. And so at least we really personally believe like you can't only focus on one specific geography. You really need to sort of look worldwide. And then on the Asia side, again, like it or not, sort of just empirically, a lot of the actual trading volume, sort of lending volume, demand side for a lot of these things is mostly in Asia. There's a lot of disputes on the analytics and metrics, but even if you take your most aggressive haircut on all that stuff, a lot of the volume and distribution is there. So yeah, we tend to pay attention a lot towards specifically between Asia and Silicon Valley on looking at these things. I guess in terms of the differences in Asia at its most sort of general high level, I think most people are much more comfortable at Bitcoin just being a pure financial speculative investment. in terms of sort of trading and just the pure financial aspect of it, like they're just much more comfortable with, versus in Silicon Valley, you tend to see much more sort of emphasis on the sort of technical, theoretical, sort of protocol, sort of new application level things. So that'd be like the sort of general comment on that.
So I want to talk a little bit about trends we're seeing in the ecosystem in terms of what people are building. If we really zoom out, there's been a few waves that we've gone through, and those waves have been followed by like VC interest and activity. Probably starting with infrastructure, so the various implementations of Lightning. The wallets, I feel like recently there's been this new wave of the fiat on-ramps directly to Lightning. Alyse, what is your view on these waves and any expectations for kind of what's emerging today?
So I think, of course, infrastructure development is always going to be critical, and will continue to push there. And so although we don't notice it, maybe as a new wave, it will be something that continually should be attended to. In terms of how we're using the technology and how that changes what new entrants, what new founders are thinking about, recently what's been exciting to me is founders that are looking at how to get Bitcoin into the hands of more individuals, whether that be through earning or through new to Bitcoin, but yet familiar conventional on-ramps. And so in both of those ways, I think we can expand the Bitcoin community, quite broadly. And of course, the goal is to make sure that we're stretching across geographies, but also across socioeconomic statuses, so that the folks using Bitcoin are quite diverse and are using it for many reasons. And then beyond that, I'm also starting to see, and I'm really excited about founders that are addressing the opportunity for folks holding Bitcoin to use it to directly access resources or services and tools that they need themselves. And so a sort of circular economy can and hopefully will develop.
Anybody else want to jump in on that one? The waves you're seeing, Oleg, maybe?
Well, I wish we all knew where to place our bets. Our job would be much easier. Well, there's a lot of speculation on what's going to be the next wave. Is it going to be like a killer app with like a butterfly effect, so everybody would onboard Lightning with a simple kind of like WeChat Messenger decentralized app to transfer sets and also to do decentralized censorship-resistant messaging, or whether it's gonna evolve like in waves in industry. Like there was just an Andreessen Horowitz blog post a few days ago about how gaming industry is taking away the revenues from like the music and other parts of the entertaining industry. And like I'm glad, because we're all in gaming startups that build games and platforms for games on Lightning. So maybe like gaming is an industry where this thing will take off. I wish we knew.
And I think another thing to keep in mind is that even though we see new trends of what folks are going after in terms of what they're building, there's still the need to address kind of a hierarchy of needs in the ecosystem. And there's basic needs that are still not fully addressed or that are being addressed by new companies. So by this, I mean things like self-custodianship and security and basic ability to acquire Bitcoin. So although there's new and exciting trends in the space, the core value propositions that companies have introduced, from 2011 through to today are still as exciting as they were then, as they continue to integrate new opportunities in the infrastructure.
Cool. One interesting thing, so I've spent most of my career in startups. We started Craft 2 years ago, and one thing I've learned about venture capital is that we have our own consensus mechanisms internally. So some angels just sort of operate independently, make decisions by themselves, but in many cases, like our firm, we're a partnership. We discuss investments together, and there's a pretty big spread in terms of Lightning familiarity or awareness. So I'm curious, maybe a question for Maria. At RRE, how is that? how is the awareness of Lightning amongst your partnership, and how do you deal with that internally?
Yeah, it's a good question. I think it's a good and a bad thing both. You know, we are a generalist firm, so each kind of partner and principal goes deep in spaces that they care about. So as a result, there's different levels of understanding. So one of our partners, Jim Robinson, who Alyse knows well, has been really OG, was in since 2013, very deep in the space, and so his knowledge is fantastic. And I think because he was in early, our general firm has a good understanding, but some of the newer stuff, not everyone is up to speed on, and so it just means there's more education, especially when we want to make an investment. But I think in some ways, some moments I find it frustrating, because sometimes I'll get really excited about a company. I was like, why don't people understand how exciting this is? But then on the same time, to your point earlier, I think it's really healthy because it keeps me focused on the fundamentals, right? Like, okay, who is the team behind this? What are they actually solving? Is this valuation just absurd for where they are? I think, the only way I know how to make money is buy low, sell high, right? Whether you're a VC investor or buying Bitcoin, et cetera. And so all those things come into play, and I think it does in some ways keep me focused on the fundamentals. But there is an education component that I think you have to be really aware of if you're in a generalist fund that may not be as close to the space. And I would also say, encourage you guys as founders, I think we all agree that it's better if there's more money coming into the space and more smart money coming in. So view your job as well as part of the education. So you should be able to pitch whatever you're solving for a customer without someone having to have a very deep understanding, and I think it'll be better for you if you can.
Yeah, and I think the best way of educating is number go up. So again, going back to traction, it's sort of, if you have good user traction or revenue traction, whatever that is, it's indisputable to anybody whether or not they understand Lightning. So.
And on that point, I'm sure you've seen stuff at Greylock. On that point, it doesn't have to be revenue, right? I think if you look at other analogies for VCs, there's businesses in the media, we invested a lot in media, like BuzzFeed, The Skim, et cetera. Giphy, right? A company like Giphy, their user charts were just off the fucking chain, no pun intended, but really amazing, long before they monetized. And so we knew they were doing something valuable, even though they didn't monetize. And so it doesn't have to be traditional senses. And if you pick other analogies that VCs are comfortable with, they can understand that. Okay, you're driving value, at some point you'll monetize.
Yeah.
Are you gonna?
Yeah, I was going to say for proof of capital, we're entirely focused on this space. So the three partners of us, we have pretty high level understanding of all this. And in the Lightning space specifically, we have one very big unannounced investment, but that will be coming out soon. But I was going to say one more tactical sort of just observation for more of the entrepreneurs out there. When you actually meet an investment partner and you pitch them and you build a relationship with them, you are, pitching that partner, but honestly, the thing you're really doing is you're helping that partner pitch the rest of their partners. Because really, the most important thing is the internal discussion. And the partner who sort of takes the lead and who makes the decision on you, he or she needs to convince the rest of their partnership to also get along and sort of be on sync in the same page. They don't necessarily need to have the full understanding or the full belief, but they need to believe enough in that individual and in that company. So yeah, I guess just being at Greylock, a much bigger firm, I saw a lot of that internal dynamic. So always realize when you're pitching the partner, it's not just about them, it's really about the rest of the partnership too.
Yeah, awesome point. Oleg, do you have something to add?
Yeah, if I can do a quick add. So investors generally operate on the notion of risk, and they're typically used to different types of risk. What I've seen, there is few investors who are investing in the technology risk, meaning they invest in the early stage where technology barely works, but there are usually more investors who invest in the marketing risk, where whether or not the technology product can really scale. So I think just it's good to be aware of what kind of risk investor is trying to calculate and show him how you can actually de-risk this investment. The one thing all the investors would have in common, that's actually Brian noted yesterday, is the FOMO and the crowd thing. So once the number really goes up, then you're good with all investors, and they will be happy to invest you. But before that, just really need to understand how to help investor explain that you are actually de-risking his investment.
Yeah, this is awesome advice. And kind of pulling on that a little bit, Alyse, so one thing I've gained an appreciation for is not all investors are created equal. There's sort of different types of investors along the spectrum. There's this category of friends and family. There's the angel investor. Sometimes they they do syndicates, and then there's the institutional investors, early stage, late stage. So what's your, do you have advice for the audience on what type of investor they should be looking for, or how to qualify an investor along their stage of growing and fundraising?
So I think on this point, what is most critical to recognize is that once you are taking investment capital, you're forming a partnership, and that investor is almost an extension of your team. And so you're wanting to make sure, in my opinion, and my advice here would be, you're wanting to make sure that the investors you choose, including if that's at very early stage friends and family or angel, is that it's an investor that you would be proud to have as part of your team. And in that pursuit, of course, it's okay to do diligence, to get references and recommendations from other founders that have worked with that investor, had experiences with that same investor. Now, even beyond that, I think something that I'm hoping to see emerge more in the venture space is a sophistication in the type of diligence and research that investors do prior to deploying capital into Bitcoin companies or other companies in the cryptocurrency ecosystem. And as founders, as you're going through that process and pitching, it's something to attend to. So earlier in the panel, we talked a bit about the 2017 hype, and Brian mentioned how pitches, successful pitches, were led with story and there was less substance behind it. Now, those were founders that were able to raise, of course, without going through much diligence, or at least not much technical diligence, right? So things were promised that couldn't be, promises were made that couldn't be fulfilled. Of course, that's entirely different, or at least it seems to me it has been for founders building in the Bitcoin space. So we are held more accountable to metrics or to building consistently with the infrastructure. And so theoretically, we should be seeing investors who are more thoughtful in their diligence when they're looking at companies in this space. And I think when you're running into investors that are taking a deep dive on your company and on your technology, and especially how your technology works in alignment with the core infrastructure or Lightning Network infrastructure itself, then that's actually a good sign that you're working with investors that want to responsibly deploy capital in the space. And I believe that those investors can be better partners to companies. And so when Stillmark is looking to participate with other investors in a financing or to bring other investors into a round, we're always looking for investors that are going to be really thoughtful and almost tough in their consideration of the company, so that we know they're investing for the right principles and have the right expectations of that company. And then one more note on that. By right expectations, something that I think is particularly important and has been really challenging in the Bitcoin space is investors understanding the scale that a company can achieve and the limitations it will have based just simply on where the core infrastructure is at. And so you want to make sure that your investor set understands both the opportunity and limitation of the infrastructure that your company is based upon.
Oh, that's great advice. And kind of playing on that, another thing that I've learned over the last 2 years is, and we touched on this, but it's not the investors, unless they're an angel, it's not their personal money they're investing. So I felt when I was at startups, it was a one-way deal. You know, the investor was kind enough to give us money so that we could build our business. The reality is this is a marketplace. You are giving them an opportunity to get a multiple on their money, and they're giving you money, the capital, so you can build your business. So Chris, if you can talk a little bit about that, that two-way street, that market dynamic, and also what, in your opinion, what does a good relationship between a founder and an investor look like?
I'd say, again, like you mentioned it, but keep in mind like the high-level distinction between, call it just like angels and funds. So angels is typically their own money. They're like typically like they've been sort of an entrepreneur before, or like they're currently building a company. So they're coming at it much more from a sort of personal, individual angle versus a fund. And then fund has all different spreads from really late stage funds, the pre-IPO funds, to sort of Series A to C type funds, which Greylock was, to more earlier stage funds, which we are. Proof of Capital mainly does seed and Series A. So the amount of capital that investors are willing to invest and sort of what they're looking for and the stage and all that really depends on the not just you and your company, but it also depends on the firm and just like the structural economics of the firm too. I think I used to be an entrepreneur before this, so I think usually when you go pitch, like you're so focused on your story that sometimes it's hard to remember that a lot of the whether the pitch or not is successful is also dependent on the other side too.
Totally. Yeah.
So yeah, I think you said it correctly. I think the whether you like it or not, whoever you bring onto the cap table, so whoever you sell a portion of your company to, you're honestly building a long-term relationship with. It's both a business relationship and a personal relationship with the person. So instead of any of the sort of more high-level considerations, you should also just honestly make sure you like the person, you get along with the person, that like you have a good rapport with them, that they reference well, that like they've done good things before, that they're like a sort of a good citizen. Because yeah, at the end of the day, like if you take money from a firm or somebody, like they're going to be with you until the exit of your company, which is typically anywhere between, call it like 7 to 10 years for things that are really significant. So you're really signing up for a long-term relationship with a person. So make sure you like the person.
Yeah. Maria?
Just to add something to that, one of our founders said it best once. I think he's like, the litmus test between a good investor and founder relationship is like, what happens when something goes wrong? Do I call you and tell you and I'm like, holy shit, this just happened, what do we do? Or do I make a pretty PowerPoint and make it sound less bad and try to like, message it the right way? And like, probably in that second case, you don't trust your investor, you don't like your investor, right? And so I think it's good to do founder references, but you can also have a conversation with the investor, right? Ask them, what happened when one of your companies went through a tough period? What did you do? How did you deal with that? How do you think you're going to deal with that with me? Like, get to know them as a person and understand how you might work with this person in both good and bad moments. And I think that helps lay the right foundation for a good relationship.
Yeah.
And a lot of people don't have that conversation.
I think the investors are always doing diligent calls on customers or former employees or whatever it is. The founders should be doing reference calls on the investor and what other founders have they worked with. I think that's a great point. Oleg, I think you have, we were talking about your past and what you see in the Lightning Network, and you were in the early stage of cloud's development as a product manager. So, the joke about VCs is we're always trying to add value, but in your case, you actually spent a lot of time in a analogous technology way with the cloud. How are you working with your companies to help them think through the problems of the Lightning Network?
How I got into Bitcoin and Lightning spaces because I did things that were kind of looking similar. Emerging technology, nothing really works, nobody understands, and in a few years it like goes to mainstream. I thought, okay, that's probably something that I can apply to make things easier. But at the end of this panel, I just realized, oh wait, we're getting in such a complicated space. We are trying to build great things like decentralized money, decentralized companies, decentralized economy, redistribution of wealth. We're going to hit a lot of complexity, like the technology is not yet mature, the regulation is not yet hitting us hard, and we're going to have a lot of first-time founders, first-time VCs in this space, even if they were like decades of VCs before. So I think the best thing that we could do for each other is being completely transparent and share knowledge and educate each other. Because we as VCs don't really know everything about technology. Founders don't really know everything about VCs. I want to bring back this point that you brought back yesterday, like your relationship with L&D Works. So that you were really trying to make sure that you're aligned on the long-term horizon, like how they see the future of Lightning and Bitcoin as an ecosystem, and that what kind of made you actually make the relationship with them. I think that's what we should be focusing on if we really want to build for the long term and do good stuff with Bitcoin and Lightning. I don't know if you answered your question really.
No, yeah, that was good. That was good. I'm going to do one more question, and then we'll open it up for some audience questions. I think the energy in the Lightning ecosystem is incredible. So just being on Twitter every day, seeing all the excitement, people buzzing around, and every once in a while I wonder, are we just in this echo chamber, or is this community expanding? Is it expanding slowly? Is it expanding fast? So Chris, what are your thoughts on that? And what's it gonna take to keep that momentum going and get more people into this ecosystem?
Yeah, it's actually sort of this ties in actually to a larger debate that we actually have as a partnership, and whether this ecosystem will form circularly. So whether it'll be Bitcoin people wanting to earn Bitcoin, wanting to spend Bitcoin, sort of all with inside, and in that world, it's okay if it stays sort of smaller and tight-knit and sort of grows from there. Or whether this actually ties in and pulls more people from outside of the sort of Bitcoin ecosystem. So all the things sort of tie in towards fiat and sort of general lending and FedWire and all of that stuff. A lot of these things can be applicable even if you don't necessarily know about or care about or even like Bitcoin. If it's just fundamentally faster, better, cheaper, you might just use it to begin with. At least personally, I think like it's okay to bootstrap internally, but at some point in time, we're going to have to sort of really tackle one of those much bigger use cases outside. We might not necessarily be ready for it like today, but at some point in time, it's going to have to hook in, and that's going to be the thing that takes it from like a sort of more smaller internal community to a much bigger thing, and that'll probably happen relatively quickly.
Cool.
Yeah, I'm really excited about things like Fold and Stack that are bringing people in who are no Bitcoiners to Bitcoiners, and to Lightning and to the broader ecosystem. I think the tension here is, and we had this conversation at Crypto Springs with a lot of people, is in order to get mass adoption, you do need fiat on and off ramps and you need KYC. But then are you just creating the same ecosystem, which is not the original intention? And I do, in my own view, I think you're going to have both, right? And like, I think it's okay to have both. I think you as a developer choose which ecosystem you want to further, because they're both going to grow. But right now we do have a KYC ecosystem, whether or not you want to play in it or not. And in order to get mainstream adoption on some use cases, I do think you need that. But you can also build things that are never going to need that, right? You have Bitrefill doing that. I think you have companies like the CBD companies or like user-generated porn companies who get totally outside of the system and can't work with Stripe, and they can work with people in the space. So I think you're going to see both, and you need both.
All right. Yeah. I think those are good answers. So I've got a few more questions here, but wanted to see if anybody in the audience had questions. Great, we got a few hands. So. Is that? Yeah, how about this guy?
So, crypto space has certain values like HODL and not your keys, not your money, not your keys, not your Bitcoin. I see VCs a lot acting in this space with a short-term focus and diluting these values, like Coinbase developing the wrong direction just for short-term gains. So my question is maybe a little bit critical, but what's your take on these core values that we have in crypto space?
Anybody want to take that?
Yeah, I guess to tie into your last point, I think, at least from sort of my perspective, like you're going to see some of both. So like if you are really going after much more of that sort of mainstream consumer, doesn't necessarily want to deal with a lot of this complexity, it's going to have to be more managed or custodial or any of that sort of aspect. At the same time, there are all the options that you hold your private key, you never touch anything, you don't go through any sort of KYC'd venues, and you want to deal with all yourself. You take on all the risk, you take on all the custodial risk, but there's that option for you too. So I think it's less of a like I don't know if I'll speak for you guys generally, but I think it's less of a VCs have a particular viewpoint on this. I think it's really just the more market reality of the customer segment that the company serves. At least in my opinion.
It's also like where we play and how we survive as a business, because like, I mean, I think there's a lot of people who are just hodling, and I think that's great. And in some ways that makes, if there's an investor who's going to put money into me as a VC, some of our investors are like, why would I do that and pay you a fee when I can just put it in Bitcoin? Which is actually a very fair point, right? And so I think you have some of the long-term things in the space, but it's actually not going to end up funneling through VC in that way, in some ways.
So I just wanted to quickly acknowledge your point and say that I think you're exactly right and hit on, one of the kind of breaks between traditional venture and what's happening in this ecosystem. And a source of that is that, frankly, prior new technology introductions and application waves have been based on just a completely different paradigm, right? Where the centralization of power and data and hierarchical structures were really critical to accumulating value. But we know in the Bitcoin space that the reason why we have certain principles like not your keys, not your coins, or why we believe in things like decentralization or fungibility and censorship resistance is actually because it makes both applications and infrastructure less vulnerable to attack, and in the same way, just inherently more scalable. So my point of view is that companies that adhere to the values of Bitcoin actually have brighter futures and ability to reach greater scale than companies that are making compromises.
That's awesome. Yeah, I love that response. So we're out of time, but it looks like there was a number of other questions. I'm sure we're all available to chat with you after the session. So thanks a lot for your time, and thank you guys for joining the panel.